Okay, so I do hope everyone's had a good session of trading and have traded well today. Uh, it's been that kind of a day where we had that demand rise up in the morning, and that was based on a little bit of a short covering as well on that higher gap up open. But now we are seeing supply come back in the market, and the market is giving up all that morning gains, and we are down to that 19390 levels. So there is this supply which is built in from about 19410 in the last half an hour or so, 25-30 minutes, and I'll still think that this is good to go down to about 19360 before the close, and 19410 on any upward probe from now could be the one which can give some added supplies. So it's completely dominated by sellers at the moment, and they are driving this auction. The buyers tried hard, but they could not really add that demand higher up, and that's why we are back to these lows over here. Right now, I'm just gonna explain a few things to you, but for the moment, let's roll with the tape over here and see what is actually happening. So this is the Nifty chart, the order flow. And this is that 30-minute chart, and this is the supply which is built in the past half an hour. See this supply. This is what broke down the market below 19420 recently. This addition of supply, and all through we were wanting to see a lot more demand show up, especially around that 11 a.m. mark, and the demand wasn't really there in the market. If you see these three zeros over here, this was the sign that the market was not adding any more demand, and IS followed initiative seller. This responsive seller was here. This was a period of quiet. The buyers and the sellers were navigating and trading with each other as locals over here. But this now clearly tells you, the second IS, that this market is now changed. And like I said, it is due for about 19360, 19340 from here. If you're into that 19500 put, my recommendation is to hold on to it. It can see those higher levels up to about 172 also is possible, because everything below 19510 is initiative selling here, and dominated by sellers. The sellers are adding strength into this market, right? So you're seeing this 252 lots, this 89 lots, this is sell side domination over here, coming 734 lots now at the lows, and the market is continuing to drop on the basis of all this supply which is coming in. So I did say 19355, 360 was due, and we are already there. Now these are all intraday levels. Just be a little bit watchful over here for signs of demand coming in. There could potentially be some profit booking of the early sellers at these levels over here. So you want to see the micro picture, you can zoom into a 3-minute chart as well. This is a very late seller, 734, but most of the supply is come here, in this bar, and they should be able to drive this down even further from here, because there is this 49 and 72 and 162, but like I said, there is a higher supply at these levels, and the buyers have failed into that higher open to pick prices higher. Now, what really happened was into that gap up, you got to have a look at the option inventory as well. I'll pick up the options table. So onto that higher gap up open, the market started writing at about 19450 CE and PE, which is typical of the auction to do so. And now this 19,450 put strike is coming off. It was about 1,88,000 all odd contracts. It's dropped already about 1 lakh contracts. This was the pair which was written earlier. The pressure is on this put writing. So that was at about 3,90,000 contracts. Now it's about 2,40,000. So let's see, okay, how it responds here at 19,355, 360 level. There is a slight chance, okay, that this level can hold for the next few minutes till we get a bounce at least. But keep an eye out on this put open interest, which is building up. Now, all these numbers are in terms of lots, number of contracts. They are not share prices. So if you're seeing, okay, a mismatch between what you're used to numbers, okay, which are 3,90,000 multiplied by 50, which gives you, okay, the volume in terms of shares. We work in terms of number of contracts over here, and that makes it universal for us when we are tracking the Nifty, Bank Nifty, Fin Nifty, etc. The number of contracts, okay, if you can track on an option screen, gives you that much more of a universal approach or a universal idea about what is happening. And if you are still used to the number of shares thing, my recommendation is that you make that switch because we are going to move into that weekly settlement 3 times a week, and you would have to, okay, pick up numbers on your thing. So instead of, okay, constantly getting confused with about 5 crores and 10 crores, pick it off the numbers, pick it off in terms of the number of contracts which are visible, and it's going to be standard for you. So the number of contracts, okay, whether you're looking at Nifty expiry or a Bank Nifty expiry or the Fin Nifty expiry, the number of contracts is the number of contracts, and it's a better way, okay, to look at data. It's a better way to look at numbers also. So this is where we are, and wanted to draw up, okay, this open interest chart for you. This is OI split, and this is at 9:15 in the morning. Okay, as we began, the put open interest at 19,300, okay, was holding up because we knew, okay, that there was, okay, a responsive buyer at about 19,308, but the 19,400, okay, was the higher one as we opened at about 9:15. These were the ones, okay, who were put into under pressure. So if you see that first half an hour of the day, they reduced this and they started adding, okay, 19,400, okay, onto that higher open the first half an hour of the day. And then at the end of the first hour, the put open interest was higher than the call open interest by some number. They kept that thing at 19,500 because obviously, okay, it was still out of the money, but 19,400 PE was building continuously through the day. By about 10:45, it was high. By 11:15, it stayed high. 11:45, it was still building. The G period, which is that period around 12:15, it was still, okay, on the higher side. Stayed up, right? 12:45, 1:15. The put open interest, okay, was okay, building up over here. But now let's look at what has happened. The put open interest, okay, has had to cover, and the call open interest, okay, is the one which is the higher one again at 2:45 in the afternoon. 5 minutes, okay, to 2:45. This is we calculate in terms of TPO increments. So this shows you, okay, what the open interest is doing. And if you want to see, okay, what is happened, okay, since the open. Yeah, so this is, okay, off 9:15, so it will not take all that little 30-minute trackings, but yeah, okay, you can say from 9:15 the 19,400 CEPE are more or less equal. Yeah, but my recommendation is, okay, if you're looking at this chart, okay, try to look at it in terms of these 30-minute periods. You can go back into time and have a look at them as well. What we like to do is to track, okay, this open interest, we like to open up one of these charts. So for instance, I want to know exactly, okay, what is happening at the 19,400 PE now. So I go, okay, to this put side and I open up, okay, this particular line chart from here. So now this was the open interest, okay, which was building up, which we saw earlier in that chart also. And now, okay, you can make out, okay, that this open interest is dropping down to over here. So this is a prop indicator we have, okay, we call it this the delta OI, which will tell you, okay, when the open interest is spiking, when the big players are coming into this position. And this, when it goes red, will also tell you, okay, that the open interest is dropping. So this is based on the last 1 day. And now, okay, you can make out, okay, that the 3,85,000 contracts, which was at the high, is at about 2,40,000 contracts. And now, so this clearly tells you that this market dropped because the open interest over here was the one, okay, which was put under pressure. And you can do this, okay, for the 19,450 also. You'll see something similar in the 19,450, which was the first one to reduce the open interest. So like I said, they were adding collectively 19,450 CE and 19,450 PE. So that was about 1,88,000 contracts at the highs, and now it's about 84,000, which we saw earlier in the option table also. So this is the pressure, okay, which is building up. Why the open interest now, okay, that open interest is a lead indicator to what is happening. So we are back to that 19,360, and we'll pull up, okay, the 19,400 put chart. So if you see the near the money open interest change also for today, see all this put open interest, okay, which was building up from the morning is gone, and now the call open interest, okay, which was dormant, gets a window into the market, gets the door open. Now they're going to start writing a lot more calls. So all this unwinding of puts is creating the move which you are seeing on screen right now. So this is that seller who is a little bit late in the game, but on this higher probe, we've seen a little bit more supply come in. So let's see. Okay, this demand, okay, is still, okay, very nominal, though there is some sense of demand, okay, coming back over here. So that early drop, okay, is now, okay, into its finishing end. 19,345, 19,350. We should, and 19,380 on any upper probe, okay, should continue to give us supply, because this big seller is still holding these levels over here. So when we go down and you see this RB kind of a pattern developing as the bar closes, that tells you, okay, that there is a little bit of a profit booking which is coming in. But the IS coming in, initiative sellers, are telling you, okay, that supply is adding back in the market, and this supply has come back over here. So we are into the I period. Let's see, okay, what happens at about 19,355, 19,360 here. I'll still think, okay, that there is, okay, a small rise possible to 380, 390, and then, okay, we'll see, okay, what happens over there. So the gamma exposure is not really high right now, but tomorrow morning when they start writing, okay, again, this is gonna shoot up. It's currently at about 19,400, and comparatively, okay, there's nothing much, okay, between 19,300 and 19,500. So it does, okay, give you a sense that if there is no awkward volume coming in the next 30, 35, 40 minutes, the spot, okay, has to come back towards 19,400 odd levels. So what we tend to see, okay, in this this is gamma exposure, and there's another term over here called gamma value. Both work differently for us. This tells us how much the market needs to produce notional volume over here for a 1% move away from here. So even if you talk about a 1% move, the surrounding strikes are majorly equal. So the chances of this being a pin, pin in the sense, okay, the market gravitating back to this level are higher because the surrounding exposure values are not that high at these levels. So this itself, okay, is not really a big number, which is surprising, okay, because we are just 1 day from settlement. But this will pick up in the at the open tomorrow. This number is going to be much more higher, and makes sense, okay, for us, okay, to read the market, okay, from there tomorrow. If you want to see, okay, the breakup of this gamma side is now still dominated by the put players. So there is, okay, that much chance, okay, of a support coming up over here. Now, for most of you, okay, you would like to look at this in terms of an open interest chart, but it is a very different chart. This is what we call the gamma exposure. It's not the same thing as reading open interest. It still tells me, okay, that there is a lot of put open interest who is still active in the market, and who have not given up their gains, okay, from the market. All right, so let me just shift my attention to a market profile chart. And this is still staying with the Nifty. I'll come to the bank Nifty as well. So this is what we've had, okay, from the open today. So this confirms, okay, that failed auction for us in the D period, and this is at about 19,444 in the Nifty today. We have that failed auction, and that tells us, okay, that the buyers were not able to transact volume above this zone immediately. So this is a short-term supply zone, especially, okay, for tomorrow's settlement. Chances of this, okay, being taken out, okay, are very less over here. So 19,444 is definitely a big supply into tomorrow. So all of you, okay, who are looking, okay, to do some math, okay, for tomorrow's calculations, 19,500 CE, 19,450 CE is the one, okay, which you can, okay, carry, okay, for tomorrow's settlement. That looks like a safe trade into tomorrow. If you want, okay, you can carry a hedge 19,500 call, okay, with a 19,550 long, 19,500 call short, okay, with a 19,550 long in whatever quantities, okay, which best suits you, or a 19,450 CE short, okay, with a 19,500 call to bring down your margins. But that is the trade, okay, per the failed auction data which we have. You can wait, okay, to take this trade at even 315, 330. So we'll see, okay, how it goes. So this is the failed auction, and the market is here right now. We've closed, okay, that gap at about 19,360. And my belief is, okay, that it comes back to about 19,400. But having said that, okay, just watch out, okay, the last few minutes today, we could still, okay, trade down to the lows and close near the low point of the day. So this particular series, okay, which we are looking at, the series of August, so this is an overview about where we are in terms of a series. So it's well into the profile of July. And if you have to take out, okay, 2 points, okay, from this particular series, okay, one is where the VWAP is, and that's about 19,500 odd levels, okay, right now. And the largest volume concentration is about 19,396. Now, the expectation is the expectation, and this is just an expectation, the expectation is still that we close the series around this 19300 zone. And if you look at all that has happened in this week, so this is that HVN which is formed 19300 19300 so far. Okay, it's been here and here, but we are still expecting, okay, that about 19390. Now this is an expectation till about 12:15 12:30 at the most, because once, okay, the settlement, okay, goes beyond 1 p.m. tomorrow, then it becomes an open game, okay, with all that gamma pressure building up and all that open interest coming up. There is no predictive value with about 100% certainty on these pricing. So I am not the person, okay, who will anyway tell you that, okay, yes, where is the settlement gonna be happening tomorrow, guys? Okay, those kind of questions are long dead. They used to work in an era about 10 years back, but in today's fast-paced markets, in the way, okay, we are working and trading these markets, those kind of questions, okay, are redundant. They do not have any value. They do not have any sense. For the pure simple reason is the settlement can be any number which is dictated by the presence of established positions in the market. And if you want to break that thing down, it is dictated by the positioning of all the option players in the market, which is the major driver of volume today, right? So if you look at your NSE screen, and if you're used to, okay, looking at numbers and breaking down everything which happens in the market, if you go to the historical data available on the NSE site, you will see that the options market builds between, okay, about 20,000 crores on a Friday to about 80,000 crores of volume, of notional volume turnover every single settlement. That's about, yes, yesterday was about 48,000 odd crores in the market. Now granted, okay, these 48,000 crores in a day are different. They are higher in the morning and they are higher in the evening, and middle of the day they are different. But if I had to ask you to break this 48,000 crores of volume which is traded every day into the 7 or 8 hours of trading which we do every single day from 9:15 to 3:30, and you would come to this value of about 7,000 crores on an average every hour. That's 7,000 CR every hour. Now, what does this piece of information tell you? This piece of information just tells you that what you knew about the market 1 hour back is very different from what you know about the market, and the difference is 7,000 CR. So would you still place a lot of value to what happened 1 hour back, knowing that the change now is about 7,000 crores on an average? No, I will not. Okay, we are great believers in current data, because most traders, okay, what they look at is the past data. And even if you look at data which is 1 day old, there is about a 50,000 crore worth of transaction which is happened between yesterday and today. And that's why, okay, most of that transacted data makes that information redundant, makes that information not of value to anyone anymore, because there are big players who have seized on that information which was alive to them then and have made decisions, and based on those decisions they have got established positions in the market. Now, how they work, okay, with these positions is what moves the market further. Now, a lot of traders, when they come to the markets, they think that only demand drives markets. That's only half the truth. If you just looked at the open interest figures of 19,450 PE and 19,400 PE I shared with you, you would have noticed, okay, that it was a lot of unwinding in those PEs which brought this market down. So there was unwinding which brought the Nifty futures down from about 19,430, 435 to about 19,360 now. And resultant of that was what we call in market profile old business coming off, and that, okay, created, okay, the move lower. So it was the liquidation of the PE writers. It was not new supply, it was old business closing. So it's not fair to say that new demand drives markets higher. It's not even fair to say that new supply drives markets lower. It's always a mix of short covering and what we call long liquidation, which puts pressures on markets, and together, okay, that creates that situation for you in which okay, you can decide okay where you want to be trading that particular instant. So looking at what has happened in the past is good, but only for context. If you got to be taking decisions, you have to okay look at current information, because that information is where the market is transacting right now. It's trading based on that current information. So if you've been struggling okay to make money in markets, you need to make that shift into moving from past data into more current data. The current data which is there on screen, the live demand and supply of markets, is what is moving markets today, and it's what is moving markets now. And this is the information which will drive it further from here. So just let's look at the open interest picture again. So this IS is still here. Initiative sellers, they are controlling the zone at 370, 380 zone. And we've seen a market okay going a little bit quiet over here, because there is some demand coming up over here. Now I said okay, this was an RB candle, responsive buying, but that's this 146 could also be a short covering of a short which was built earlier, coming off at these levels. So all this is to me, it is a short covering which is happening of all the shorts which was built earlier. So because supply is coming off a bit, that's why okay we are entering a quiet phase, and we've been quiet okay for the past 20 minutes now. Let's wait this out. There is still okay one move okay pending around 3 p.m. Let's see okay what the order flow okay prints for us. So into tomorrow, just to reiterate, 19,445 would be our supply zone. You really don't want to see this market. You really cannot see this market okay do a lot more above 19,445, because the buyer had the chance over there today and he's failed. So we work okay with that as the upper reference now. The option picture is projecting 19,400 still, and with the price okay around that zone now. We could okay be in a phase okay where we are around this zone, but there's definitely okay supply which is built up again in the market, and let's see okay how we move from here. So 3 p.m. and most of you okay would know okay that around 335 the market okay has always okay got something going. Have a look at this open interest chart. Have a look at this order flow chart over here now. $300 contracts already in this bar. So the first thing okay I'm picking up is again okay the absence of demand. There is this okay supply over here, but lower down okay let's see okay what is happening. So that's about 450 contracts in this bar already. So the same old demand is trying to come back over here and arrest okay the supply which is coming in. But this, when it prints zero, right, okay, at the highs of the bar, is an early indication to you, okay, that there is no new demand coming up, at least in this bar. And a sequence of this coming through will tell you, okay, that demand is absent. So there is a zero here, zero here, zero here, zero here, zero here, zero here. That means, okay, this level is now a no demand zone. So what you want to see now is lower down here as the market probes how much more pink is coming into the market, how many more reds are coming into the market. So far, okay, we have not seen a lot of supply adding up at the lows. The minute, okay, it starts adding up, this market, okay, gets another leg lower. Supply is content. They are not really, okay, pushing at the lows still. 950 lots now traded in this bar. It's the 3 p.m. bar. Not a lot of volume activity still. So assuming, okay, you lost out on this big move lower from 19430 and you were not in the market, or for whatever reason, you did not, okay, you did not participate in this leg of the move lower. Now you want to buy a put in this market. But when you come to buy a put in this market and you're seeing all these greens over here at this point, this is not the place to initiate a new long position, because the market is telling you that there is no new supply being added at these levels. Right, so these two greens, okay, which came in 216, 137, this again tells you, okay, that no new supply came in, so it's going to challenge back that supply at that early level of about 19380. Let's see, okay, if we go back to about 19380 from here. There is, okay, now, okay, supply getting added up back over here. This is new information now coming back into the market. Let me just shift my attention to the bank nifty, which is getting those supply points here and driving, okay, this down further. This is the bank nifty chart on screen. So the bank nifty has just picked up this new supply right here, and it's been the one, okay, consistently adding supply all throughout at 44,430 levels. See this absence of demand over here, absence of demand, something similar we saw in the Nifty, but the bank Nifty is putting in a lower low because there is not a lot of green at the lows. There is, okay, some green, but not as much as the Nifty futures. There is a lot more supply which is there evident in the bank Nifty. Maybe it wants to tag this 44,340 level. Now, this is a 30-minute bar chart, and we've not looked at the bank Nifty so far. But between the Nifty and the bank Nifty, the bank Nifty has been the weaker one. So this is okay what we saw early in the morning, right up over there. As it moved higher, the Depop okay moved higher. There was this supply okay which came in. The demand okay started to come back over here, but it was quickly overpowered. Even in the next bar, it's all okay a supply dominated bar, and even in that move up, the cot okay was about 2425. So you don't really okay give a lot of utility to that move up when you see this cot over there. So which is the reason okay the bank nifty fell. In the next bar there was okay some profit booking here. It went okay to a period of consolidation, but now you can see okay the signs of selling picking up okay from this 44,600 levels. All this is new supply which is coming at 44,590 levels, and you can okay look at this cot also to know okay that it was a supply dominated bar. Now we have an IS, an initiative seller, an initiative sell side bar which is coming. Even in this bar it's a big bar, so there is okay some profit booking okay which is coming in. So the bank nifty is leading all the downside over here. A lot of supply adding up in the bank nifty. There's no flow right now till we go to this 44,150 mark in the bank nifty futures. It's dropping even more. Supply okay seems to be adding back again in the bank nifty. 44,150 is where it is navigating itself to. 44,210 now. So all those IS bars, okay, whenever they show up in the market, 85% of the time the put writers are gonna be under pressure. So 44,165 is what I mentioned. At 44,240, we are already there. 44,140 now. A lot of supply in the bank nifty. So those IS bars, okay, are coming and putting a lot of pressure on the put writers. all supply, right? See this 1261 lot seller, clean move, okay, lower. So that VPOC has been hit at about 44 140, 44 160, and that added the pressure onto the Nifty as well, which is also dropped in. So this is an entire IS bar over here. You can see, okay, the selling initiated here at about 44 260. The seller has an easy chance over here, and this is the only buyer who's holding the march of the seller. 270, the seller adds about 1261 lots, okay, on these level at 44 260, creating, okay, a further drop. There is virtually no resistance to this move lower till this 238 and 140 come at the lows, and that is the sign of early sellers, these ones booking profits to 38 140 at the lows, and we're getting, okay, a small jump. But higher up over here, 44 226 is still with the seller, and you will see, okay, resistance into the close. So it's a typical neutral extreme profile playing out in the Nifty. That expected move to 19,380 did not come, but nevertheless, okay, we are still gonna get a close at the lows today. Still about 15 minutes to go into the day. I'll bring up the Nifty chart back. So this is pointing now, okay, to a close at the lows. Again, not a market to go long, not a market to buy puts. This is definitely closing down. There's a lot of supply which is there in this tape. So don't do stupid things like buying a call in this market. Now, okay, the put writers are under more pressure because we've seen, okay, a string of IS hit the tape, right? So even in the Nifty, there is a third IS, okay, which is formed in the 30 minutes. So this IS bars are shown up in a purple on your screens. Always remember one thing: an IS bar is never a friend of a put writer. Okay, the put writer should panic when he sees an IS bar show up on a 30-minute chart, because, okay, it means, okay, that his position is gonna get crushed very, very soon. This is an early indication of what the market can do next. And I repeat that it's an early indication of what the market can do next. So whenever you see initiative sellers, quickly run, okay, to your options screen and look at what the inventory of the market is, where the positions of the market is. And if you see, okay, a lot of put writings at one place, and they are the ones, okay, who are going to get pressurized whenever, okay, you see an initiative seller come up in the markets. So what we are saying over here is we are looking at the market in terms of a few things. One is, okay, what is the bias we need to adopt in the market? Number two is you need to understand what the rest of the market is doing, because whatever the rest of the market is doing can be a trigger to the next possible move of the market. For instance, today, the put writing is a trigger, okay, for what we've seen since we started this conversation at 2:30. All that put writing closing off is a trigger. So you need to have a fair idea about what the rest of the market is also doing. And number three, you have to understand or have a system in place to read real-time demand and supply. Because like I've been mentioning, real-time demand supply is a factor which influences market to the tune of about 7,000 CRs of notional volume every hour of about 50,000 crores daily. And you really cannot work on yesterday's data today if you know that the market is going to be transacting about 50,000 crores on an average between yesterday and today. Yesterday's data has no meaning. What is happening now in the moment currently is what is moving markets, and you need to be focused on what the now picture of the market is. Now. If you are into the now, if you are trading the now, you are going to be getting more favorable results for yourselves. So this is the picture. The call writing is severe, and I spoke to you about that 19444 resistance. That is now, this is the rest of the market. No, this is what we call the sentiment, how the rest of the market is placed. Now, and I bring up a market profile chart. I am looking at structure of the market. And what is my structure telling me for today? That this was a failed auction by buyers. A failed auction simply means that the buyers lost control. They could not seize the advantage they had. So now this is a supply. So my structure is telling me that 19450 and upwards is higher, and started telling me when this low at 19390, 380 broke. And we also saw a lot of supply build up over there. So two things. 19450 is definitely supply into tomorrow, and we've tested this POC of yesterday. Let's see where that gamma is into the close. So it's now come down a bit because of this move on put writers. Previously the put writing was stronger. So some liquidation has happened, and now this gamma is more or less the same thing over here. Spectrum is about 19,300, and 19,450 is what the spectrum has also come down to. We also just mentioned that 19,450 is supply into tomorrow, so it still expects 19,450 to be the resistance and 19,300 to hold into tomorrow. Have a look at this yellow line sloping down this way. So this is always going to tell you that the market is changing its inventory structure. Okay, let me repeat that. This yellow line sloping like this on a spectrum chart is always going to tell you that the market is changing its inventory structure. So in this case, a lot of puts got liquidated. That's why this started sloping down. But it could also mean that there were short futures introduced to protect some short put inventory, and we saw that in the initiative sellers which showed up in the Nifty futures chart. So there are two ways the market adjusts inventory. One is of course clearly liquidating. So whatever was a short put, those people with limited margins will come out of it. But most of the money, what they'll do, the big money, the HNIs and the big funds, they'll keep that short position intact. They'll add short futures. So what they'll do is you'll see this in this chart over here, all these IS bars and all these big sellings which came in. This was the big seller, right? About 617, 333, 880, right about 390 levels, and further up over here. This was the introduction of short futures which drove this market lower, right? So all of them who were short puts, the big funds, they hedged their exposure by adding short futures inventory. Some of the other people, they closed that put side inventory, and that's how that market came. So it's always a dynamic factor, guys. It is not just one or two things which determine this huge industry we trade out of. it is very, very huge, it is very, very large, it's a sum of many, many parts, and no one chart can give or make full justice to it. So you have to look at everything as a sum of many, many parts, which is why we say there is no one way of understanding the markets fully. There is no one way to know for sure what is happening in the markets at all times, but we do our best to bring as many pieces of information together on one particular chart. And when you can do that, you gain a better or a bigger edge in monetizing the information which the markets keep giving you. So the entire play over here is to read information about the markets in real time and be in a position to monetize it. Monetize means, you should be in a position to make money out of that information which is coming to you. So this is where we are at the close of today. There's been a substantial shift in the inventory, especially on the put writing side. We are back to where we were trading all of yesterday. In fact, in the bank Nifty, we are much, much lower. But for the Nifty, that 19,400 is still a factor into tomorrow. 19,450 is a resistance, as we said. Not really expecting a lot of downside immediately, unless there is a gap down and an unexpected event like today. Then we'll have a trade again at the open. This morning was a wonderful time to get into a long call position based on the higher open. Tomorrow, if we get a gap down, there is a trade again setting up at about 9:15 a.m. in the morning on that long trade thing. So we'll see how it works out. You can never predict what can happen at the open. A lot of new traders, they waste the entire energies and their efforts in finding out what the market can do at the open. Let the market do what it has to do at the open. What is more important is what you do with that open, what you do post that open, or what kind of positions are ready for you in terms of an opportunity post that open. You can speculate and you can look at the Dow and you can look at the SPX and you can look at the European markets and you can do what you want, but there's not a thing you can do before 9:15 a.m. in the morning. So just leave all of that aside. What you can do is best prepare for whatever possibilities can come in at the open. So if you take that morning 1 hour for yourself and you look at the previous structures and you look at the order flow of the previous day and you look at the sentiment of the market, look at where the open interest, etc. is, and find out how best I can respond to this information at the open, then yes, you can monetize it better, and you can make a lot more for yourself based on that. Right. So just to sum it up, the bank Nifty is hit that weekly HVN and was that low of about 44,160. So this is support into tomorrow as well. You really want to see the bank Nifty trading a lot above this level, 44,150 tomorrow. So if it holds this level tomorrow, there is a potential bounce on the cards, and we can undo some of this damage which is come in the bank Nifty today, provided it holds above these two levels over here. So roughly about 44,140 and about 44,000. There is carnage tomorrow if we are below 44,000 for any reason in the bank Nifty. Doesn't look like the case today, but that is a possibility which you cannot ignore. Okay, anything below 44,000 tomorrow, and this I'm speaking about the Bank Nifty future, but it would not matter because being settlement, okay, they would be coming at more or less the similar pricing tomorrow. So 44,000 roughly holding, we can get a small match back up to this broken zone around 44,500, 550 tomorrow, right? So that's the Bank Nifty. And the Nifty 19308, is the buyer we've been speaking about. That responsive buying pattern still holding. The spectrum still believes that is a good support, and we'll stay with it that way. So about 19300 holding. This market can go back to about 19380, 390 tomorrow. Again, everything changes if we are below 19300 at the open, and 44,000 in the Bank Nifty at the open, in which case we will crush more inventory, and we'll have another big round of trading to do. So 19240, 19260 would be 19245 rather would be the level to watch out for if we do get that lower open. And in the Bank Nifty, if we do further down from here, then about 43,850 is the level where you can look for some initial adjustment of positions to come in, right? So we are there, we are closing near the lows of the day because it is a neutral extreme profile in the Nifty. We are closing in an NV day, a normal variation day in the Bank Nifty, dominated by sellers. The Bank Nifty would find a supply on any higher probes to about 44,600, 44,550 tomorrow. Anything higher, expect the sellers to come back into the Bank Nifty. And again, 19,400 in the Nifty. Expect supply to come back over there. Right. So in summary, what I like to say over here is focus a lot more on what the option markets are doing. The option markets are the movers and shakers. So whether you are a trader, whether you are an investor, or whatever role you have in the markets get driven by the options world. And you can look at ways to monetize the information which the charts are giving you. You can move quickly from that 90% of people who do not make it in the markets to those 10% of people who are making money every day in the market. I showed you in the order flow charts how people position themselves and how they are entering profitable positions for themselves. This is something which we see every day over here. So we know that there is a certain number of people who make money every day, and see, we are not as smart as them, neither do we have the tools and the resources to understand as much as them. But this I definitely know that if you can follow the footsteps of big money, and if you can do what they do, your chances of going out there and getting yourself a favorable trade are that much more better. Right, so we are closing 19,340 in the Nifty, 44,190 in the Bank Nifty. I hope everybody had a wonderful last 1 hour of trade. I wish you the best for settlement tomorrow, and thank you for joining me on this live stream.